ASML is the only company in the world that makes the machines needed for the most advanced chips. Everyone says it's a monopoly, and yet take a look at the stock. Over the last few years, it really hasn't gone anywhere. So what's going on? How can a company with no real competition, huge profit margins, and technology that the world relies on not see its stock price take off? In this video, we'll go through the reasons why I think the stock hasn't grown and the hidden risks of the company, the kind of things you don't usually hear about in the headlines. When you ask investors why they love ASML, the answer is almost always the same. It's a monopoly. That alone is enough to make investors excited. And I get it. Who wouldn't want to own the only company in the world that makes the machines powering all of modern technology? But here's what's interesting. ASML itself, in their own financial statement, lists competition as one of its biggest risks. So, hold on. Is it really a monopoly? And if it's not, who are the competitors? This is where things get interesting. And as always, truth isn't black or white. To know whether ASML is really a monopoly, we first have to understand what they actually sell. ASML makes lithography machines. These are giant room-sized systems that use light to print tiny patterns onto silicon wafers. These wafers eventually become the chips inside your phone, your computer, or your microwave. But here's the key. Not all chips are created equal. The chip that runs AI models inside your iPhone looks nothing like the chip inside a toaster. And the machines that make them are different too. ASML sells a range of machines. On the older side, they've got DUV systems. These are still widely used because most of the chips don't actually need cutting-edge performance. On the other side, you have EUV systems. These are the crown jewel. These are the only tools in the world that can make chips with transistors small enough for things like GPUs and smartphones. Now, to analyze their products, I've put them into a bubble chart. On the x-axis, you have the average price per machine. On the y-axis, you have the number of units sold. And the size of the bubble is the total revenue. What you'll notice is fascinating. DUV machines sell in large numbers, but they're relatively cheap. EUV machines sell only a handful per year, but at astronomical prices. Ideally, you would want your products up here in the top right corner, expensive and sold in huge numbers. So, is it a monopoly or not? Here's the thing. In DUV, there's actually competition. Nikon and Canon both sell similar machines, although they've fallen behind in the advanced versions of DUV like immersion lithography. In EUV, there's absolutely no competition. Literally zero. Nikon and Canon gave up years ago. Nobody else even tries. Which means if you're talking EUV, yes, ASML is a pure monopoly. If you're talking DUV, ASML is the leader, but they're not alone. Now take a look at this chart I've made of ASML's revenue. You can see that DUV still makes up the majority of sales. And in the past year, that share has actually increased. That's why they list competition as a risk. They dominate, but other companies still sell similar tools, even if not at the same level. So investors are both right and wrong. ASML is a monopoly, but only in EUV. In DUV, they're still competing. And that brings us to the bigger question. If ASML controls such critical technology, why hasn't the stock grown? Well, part of the answer has nothing to do with machines and everything to do with who's buying them. Alright, so ASML has a monopoly on EUV. That sounds amazing, but here's the catch. They work in such a tiny niche that very few customers buy their products. That's the problem most investors don't think about. ASML is not like Apple or Microsoft selling to hundreds of millions of people and businesses. ASML sells to a short list of companies that need their machines. When it comes to DUV, they sell to around 15 to 20 customers worldwide. which you might think is very little, but in the UV space, it's literally just three: Intel, Samsung, TSMC. No one else has the financial and structural capabilities to buy their products. And when half of your revenue comes from three companies, you really have to trust those. If any of those three have a bad year or something happens to them, well, the pain trickles down to ASML right away. So if you invest in ASML, you're not just trusting the company, you're trusting Intel, you're trusting Samsung, you're trusting TSMC. And here's the problem: each one of them comes with a baggage. Intel, we've seen in the past month, it's tied up in US politics. TSMC sits in the middle of Taiwan and China tensions. Samsung is battling its own challenges in Korea. Fewer customers mean higher risk, and the market prices that in. But even that is only half of the story, because with ASML, it's not just who it sells to, it's who it's allowed to sell to. And that's where being a monopoly comes at a cost. We've talked about ASML's monopoly in EUV. No competition, total dominance sounds like a dream. But that monopoly didn't come for free. ASML didn't stumble into this technology by luck. They've poured billions into research since the mid 2000s. And when you need that kind of money, you don't just get it from venture capitalists or angel investors. The only pockets deep enough are governments. And that's exactly what happened. The Netherlands, the European Union, and the United States all funded ASML's research. That funding is what gave them an edge. For example, Japan didn't do the same with Canon and Nikon. Vision and execution mattered, sure, but without government backing, ASML wouldn't be the monopoly it is today. But here's the trade-off. When your monopoly is built on government money, you're not entirely free to run your business as you want. And the clearest example of that is China. China is one of ASML's biggest customers. But in 2019, the Dutch government, under pressure from the US, blocked ASML from selling EUV machines to Chinese companies. In 2022, that ban expanded, not just EUV, but also the most advanced DUV machines. So despite being their largest customers, ASML is legally barred from selling its best products to China. That's billions in revenue they'll never see, simply because the doors are locked. But here's the paradox. ASML became the leader thanks to government support. And those same governments are now the ones tying their hands. It's a monopoly, yes, but it's a monopoly that's politically controlled. And that's the opposite of what investors want. They want companies that operate independently, with strategies free from political interference. That political interference introduces a massive risk. What happens if the US leans harder on the Netherlands and says no sales to China at all? That's potentially 30% of ASML's revenue gone overnight. But here's the thing, politics isn't even the only dependency. Even if governments stay friendly, ASML's entire business can still be brought to its knees by something else, its own supply chain. So far, we've seen that investors have to trust ASML's customers. But there's another layer that people overlook. ASML has to trust its suppliers, and that might be the biggest risk of all. ASML's machines aren't built from off-the-shelf parts. They require hundreds of ultra-specialized components, many of which come from just one or two companies in the entire world. This isn't a situation where you just can switch suppliers. In many cases, there are no alternatives. If one company fails to deliver, ASML simply cannot build its products. Period. Take Zeiss, for example. They make the mirrors and lenses that ASML uses in their lithography systems. These are not normal mirrors. These are the flattest surfaces ever produced by humans. So precise that their accuracy is measured in fractions of a nanometer. Without Zeiss, ASML doesn't ship a single EUV machine. Full stop. Many of ASML's critical suppliers are monopolies in their own right. That means that ASML's monopoly depends on a chain of monopolies, any one of which could snap under political pressure, natural disaster, or corporate missteps. Even ASML's own executives admit to how incredibly difficult it is to decouple their supply chain. If one link breaks, the whole chain breaks. So ASML might look like an unstoppable monopoly from the outside, but on the inside, it's built on a supply chain so fragile that trust has to trickle all the way up as well. And that brings us to the most important question of all. Not the technology, not the politics, but the numbers. At the end of the day, how much money does ASML actually make? And what does their future growth looks like? All right, let's talk numbers. Because for all the politics, supply chain drama, and monopoly talk, at the end of the day, investors care about one thing: revenue growth. And here's the thing: ASML is not going anywhere. In fact, it's hard to imagine the future of technology without them. If you believe in AI, in faster chips, in more advanced devices, ASML is one of the companies making all of that possible. According to ASML itself, they predict about 52 billion in revenue by 2030. I took their projections and I combined them with past performance to see what kind of growth curve makes sense. And here's the chart. If ASML is going to hit that 2030 target, they'll need to be doing about 31.6 billion in revenue in 2025. That's slightly below what many analysts expect, but to me that would still be a very solid result. And honestly, they could overshoot that number. Financially, it's a fantastic business. Gross margins above 50%. That level of profitability only exists because of their near monopoly position. There are cracks. Operating cash flow has not been consistent. It was almost 11 billion in 2021 and it went down to roughly half of that in 2023, and that's because of two things. Semiconductors are a cyclical business and ASML really depends on a handful of customers, as we said. So ASML will grow, the numbers are strong, the future is bright, but here's the key takeaway. If you're expecting a smooth, predictable growth every single year, this company might disappoint you. ASML isn't a straight line up. It's a monopoly, but a monopoly with strings attached and fragile dependencies. Which brings us to the initial question. Why hasn't ASML stock really grown despite being a monopoly? Because when you peel back the layers, that monopoly comes with the revenue dependent on just a handful of customers, their future tied up in politics and export bans, a single missing piece of their supply chain stopping production, and their cutting edge products sold in limited volumes. The business is amazing, the technology is unmatched, but the stock price reflects all those risks, and that's the real answer. ASML is not growing that much, not because it's not a great company, but because even monopolies can be fragile. And the market doesn't reward that. I think if those risks don't come true, the stock price will grow eventually. However, I don't expect the explosive growth of tech stocks we're used to. If you found this breakdown helpful, make sure to hit the like button. It really helps out. And if you want more deep dives into companies where the story isn't as simple as it looks on the surface, hit subscribe so you don't miss the next one. Thanks for watching. I'll see you in the next one.